how do you invest in a bear market? Well, let's go back to my experts, and I'll go to you, Robert. Let's start with U.S. equities. Have we seen the bottom of it? And should investors still look for good bargains, or what should they look away from?
Yeah, no, I think it's always notoriously difficult to try and call the market or to, have any idea where the bottom may be. But I think what investors should keep focusing on is relative trades. They're increasingly important when you're in this kind of bear market decline. So if you're looking at US, you look at different sectors. So for example, we know that value stocks have done quite well through this adjustment process, and there could be more upside to come for them because valuations have corrected so much. Another one, of course, is energy-linked equities relative to oil prices. That could still have more upside to come. And then I guess the other one would be, say, financials relative to non-financials. There could still be more upside to come there with rising interest rates.
Okay, let's go a little more specific with you, Hou Wey Fook. Earlier, you advised investors to stay invested in global healthcare. Does this still hold true for you?
Yeah. Because global healthcare is really what we call a defensive growth strategy. It rides the secular trend, of the world becoming older, the aging population, and spending on healthcare can only go up. So I think it's a good exposure to have within, total kind of portfolio construct to have these global healthcare equities.
And Stefanie, what would be your 3 big investment themes for the second half of this year?
One big investment theme, I think we mentioned it already, for me would be Asia, and especially China. So of course, the big question mark is, do the global headwinds kind of change the opportunity here? But the way it looks right now, especially the China macroeconomic story, the reopening that is delayed because of the zero COVID policy, the less regulation that we see coming in, the markets that have already sold off to a large extent, and so valuations are much more attractive. All of this combined makes definitely the Chinese equity space for the second half of the year a very important part to look at. I would want to wait for volatility to come down first a little bit, so it looks like there's a relative outperformance, but at the same time, especially right now, you mentioned new sanctions that are now imposed on Russia with gold. I think we have to just monitor how much more of a geopolitical dial-up we get at the moment before we focus completely on that.
Sani, and despite this challenging environment, we want to stay optimistic that there's still value to be had. So in terms of opportunities for investors in this part of the world, what would you say?
Well, we're advising clients. We are basically long-term investors. So basically we ride through cycles, so to say. So we don't go totally out, totally in. We're asking investors to just lower down volatility in their portfolios. We think that there is a time where not losing money is making money, given the high volatility in markets. That's the period we're in now. But after that comes the opportunity, and we all know that it's in recessions when stocks and bonds get thrown out of the window with the bathwater. That's really when you can pick up gems. So we're preparing for that period, and I think if you're going to enter now, basically it's diversify and do it probably on a dollar cost averaging basis, because you really can't pick where the bottom is. So that's really the best strategy that you can adopt in this period itself.
So this final part, let's just open it up to everyone. I mean, if you were to come face to face with a risk-averse investor, Stefanie, what advice would you give that person?
Well, risk-adverse, then you've got to stay in the fixed income space, stay invested, go short duration, make sure you are not exposing yourself to too much of potentially still coming rates risk. But it's still better than staying in cash and have inflation eat it away.
Robert?
Yeah, and I think too it comes back to looking at cross-country shifts. So I mean, even in Asia, of course, the inflation pressures are less. So if investors are looking for a yield income from fixed income, Asia has better real yields on offer than, say, the developed markets at the moment. So that's another positive.
Hou Wey Fook, risk averse.
Yeah, so if you are risk averse, then you would want to have more allocation into what we call income generators, bonds, including dividend-yielding stocks like Singapore REITs, for example. Now, if you can take a little bit more risk, then you have more allocations towards what we call the return boosters, right? And I think in that respect, the technology stocks, the global technology stocks are still very much in play. So this year we have seen a sell-off in NASDAQ, but really if you kind of look deeper into it, there is a huge bifurcation between the profitable tech, which fell in the order of 30%, but the loss-making stocks actually fallen more than 75%. So I think, given where the levels are for profitable tech companies, that's not a bad time to kind of re-engage in them.
So he started on that vein. Sani, what if you're open to more risk? Where would you advise people to go?
Well, we're looking at more the alternative investment markets, where you can find what we call non-market correlated investments, investments that are not correlated to the traditional stocks and bonds. So you try and kind of like move away from the volatility there. You can find some gems in private equity, although you have to be very careful as liquidity is being siphoned out now. Some of them may get into trouble. You can find some which are decoupled from volatility because of the way they're structured. They do things like arbitrage, long, short. So basically they get rid of the volatility of the market. So I think that space, unfortunately, that space probably is only for high net worth individuals. And so the retail investors may struggle a little bit if we're talking about going into these assets.
Risk takers, Robert?
Yeah, I mean, I guess another one too, of course, and that's linked to the private markets. And of course, there's the whole spectrum there. So, I mean, private markets have the advantage of offering things to conservative investors as well as to people who want more risk. I guess you could look at more infrastructure projects because on the one hand, there could be stronger returns to come from those given, more deregulation globally and deindustrialization and these kinds of things. So, there's some opportunities longer term that can be beneficial for people who want to take more risk.
And you get the last word, Stefanie.
Well, I would have said exactly what everybody else has said. I think we got a lot of inquiries in these very volatile times for private equity engagements, I have to admit, because it's just very tiring to be exposed to this public market volatility right now, and it's going on for a long time, since February now, since the war started. So if you wanted to, escape from that, then private equity opportunities are fantastic.